What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did finally see a volatile sell-off after plenty of warning signs that this market could possibly roll over. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did have a volatile sell-off, closing over 1% lower and breaking below that critical support level at 441. Remember, just last night I was saying prepare for a stock market correction, and it's very possible we're about to go through a correction. We hit that critical price target at 446 and we did get that false breakout look, and that's why we always wait for the second day close over a price target. It's very easy to see a breakout and get overly bullish, and that's exactly why you get those false breakout looks. Of course, the rest is history, and now we're below critical support, and we are one day away from losing the bull trend if we get another red day of price action below critical support. So hopefully you heeded my warnings and you did have some cash ready, but don't be in a hurry to catch a falling knife. Remember, we just started this sell-off and it's very likely we could be coming back down to this 50 EMA around SPY levels of 434. So don't be in a hurry to put that cash to work. That cash is there so that you can buy much lower, and you don't want to just go all in on the first 1% drop after you start seeing volatility and selling. We're definitely going down on increasing volume, even though today's volume was lower than yesterday's. At the same time, I don't want you to start over panicking. If you're 100% in this market and you didn't raise any cash, you absolutely need to have an exit strategy, because you can't just hold 100% in an over leveraged account as the stock market is going through a correction. If you're not over leveraged on margin and you're not in a ton of call options, then you should be just fine, because most investors have no trouble holding through corrections, and if anything, they're only going to buy more. So at this point, just manage your risk, because it is possible we could see a correction, and we did meet the requirements for a stock market correction when we did hit that price target at 446. So like I said, respect that resistance level, and now you can start to see why I was heeding those words of caution. To the downside, you want to now watch support at 437, the gap closed just below 436, and that 50 EMA at 434. If we break below the 50 EMA, this is definitely going to look like a stock market correction. For the time being, this is still a pullback, and a pullback is anywhere between about 1.5% to 4.5%. If we start getting to 5% and more, that is now a stock market correction. And if you look at this year, SPY has not had a true 5% or more correction, so it is likely going to happen very soon in these next few months. This could be the time we're going through the correction, or it could come sometime later in the year. I just want you to be prepared. Instead of trying to call a top, let's just prepare for the worst and hope for the best. To the upside, you'll now have resistance at previous support, which is 441. And if we can get back above 441, we could hold on to this bullish trend. And this could actually be a bear trap or a false breakdown to the downside. So don't give up on the bull market just yet, because one day does not set a trend. However, when we get over to the NASDAQ 100, you can see the tech sector is telling us a lot more warning signs. So jumping over to the NASDAQ 100 triple Qs, remember I told you the triple Qs closed below critical support just yesterday, so that was a warning sign. Today we retested that support level as resistance, which is just below 367, and it did trigger resistance sell-off, and we closed below the next critical support level below 362.7. So the triple Qs, which represent a lot of the tech sector, are starting to roll over. We did lose the bull trend today, which is a very significant development, because the triple Qs have had that bull trend for quite a while and we now lost it. That means we're below critical support without a bullish trend, which significantly increases the chances we're going through a volatile correction. So even if we start to bounce from here, you still need to respect the fact that we no longer have the bull trend, and you no longer have the bias to the upside like we used to have in this bull market. On the daily chart, we need to see the triple Qs getting back over 367, and we need to regain the full bull trend before we aggressively buy the dip. So heed my words of caution. This is not the time to be buying the dip. This is the time to be cautious and waiting for critical support. On the triple Qs, your next critical support level will be down here around 358. So I would rather you wait to see if we're going to test that level before you put some cash to work. If you start buying too soon and we continue to go lower, let's just say we go all the way down to 350, you're going to learn a very painful lesson, because you're buying too aggressively, even though we are losing the bull trend and we're below critical support. So now's the time to be disciplined and listen to what I'm telling you, because a stock market correction is not a bad thing. It allows you to buy good stocks or indexes much lower. Just be disciplined and have a game plan going into the correction. So watch the next support levels below at 360 and 358, and below 358 we could be coming down to the support trend line around 350. To the upside, watch resistance right around 367, and we need to get back over 367 to even hope to save this bull market. On the Dow Jones, we were down 1.05% today, and again we did close below critical support right at 351. We closed about $1 below that, and the next critical support level is also the 50 EMA at 348. If we break below 348, look for the gap close at 346, and below that, the next support level will be down here just below 342. Again, we need to break back over the critical support level, which is now resistance at 351, and the Dow Jones does still have the bull trend, so a bounce as soon as tomorrow could hold on to the bullish trend, and we could see the Dow Jones looking bullish yet again. But don't try to catch a falling knife, and don't be in a hurry to buy at these levels. On the Russell 2000, we were down 0.87% today, and we did break down below the support trend line, and we are in the full bear trend. So the price action's below all the moving averages, and we do have the full bear trend. So it's official that the Russell 2000 is now in a bear market yet again. We're back below support at 215, which means we could be coming back down to 212 and then 209. Below 209, look out below because the floor is going to fall out and the Russell 2000 is going through a major correction. To the upside, look for resistance at 215 and right around $219. On the Arkk ETF, we were pretty flat today, only going down 0.04% thanks to the massive rally in Tesla stock. We're holding that support level at 115.5, but if we break that level, look for support at 112.6 and 109. Upside resistance is still going to be 120 and 121, and Arkk needs to get back over 121 to start building up a bullish trend yet again. Today on the VIX, we saw a huge spike going up over 20%, and the VIX did close over 20. Remember, I told you the VIX over 20 significantly increases the chance we're going to see that pullback, and that's exactly what we're seeing with the VIX. If we see the VIX continuing to climb tomorrow and closing over 23, now I want you to be on the lookout for that stock market correction and significantly more downside. So right now, the VIX is telling you to be extremely cautious and don't be in a hurry to buy because volatility is here. And when volatility starts kicking up, we could easily see a minus 3% move in SPY in one single day. I know a lot of you are not used to seeing that, but it is completely possible, especially coming down from an all-time high. So respect the VIX because at this level, you want to be extremely cautious and you will start to see a lot more volatility. On Bitcoin, we're currently down about 0.5% and we're still over that positive sloping 20 simple moving average, which is just above 43,000. So you still have critical support around 43,000 and you're still in the full bull trend. So I want you to remain bullish on Bitcoin at this time. Resistance levels are 45,000 and above that, we could start to run to my price target at 51,000. We'll still need to break out above the previous daily high, which is just under 48,000. If we break below 43,000, look for a retest of support at the 50 EMA, which is just above $40,000. On Amazon stock, we were down 1.26% today, and we did see Amazon testing that critical support level at 32.08 and closing just below it. So at this point, Amazon is officially in a bear market because we did see the 20 simple moving average crossing below the 50 EMA today. From here, it is possible we are due for a dead cat bounce because the cat is officially dead and it's due for a bounce. So from these levels, look for Amazon to test one of these resistance levels above at 32.80 and 33.11. If the dead cat can bounce any higher than that, we could go all the way back up to 3,400. But because Amazon stock is in a bear market, I want you to be patient and not trying to catch this falling knife. Set your risk level at 32.08 and below that level, be a lot more cautious. Around this level, it could be a buying opportunity, and we still do have a huge gap to fill above at 35.80. So if you're going into Amazon for the long term, you could start accumulating at these lower levels. In Tesla stock, we were up 3.5% today, and we did see Tesla closing back over that 20 simple moving average, even though we did lose the bull trend. If Tesla can get back above about 695 and start getting ready to close this gap at 714, we could regain the bull trend and we could see Tesla start climbing towards our price target at 765. We can see that support trend line did hold up and Tesla did see a very strong bounce off of that level, and we're back over the 50 EMA as well. So Tesla is still looking bullish at these levels. Even though we did lose the bullish trend, we did see a strong bounce off of a critical support level. So watch for Tesla to try to break back above resistance at 692 and close the gap at 714.5. Above 714.5, look for the gap close at 732 and the price target at 765. To the downside, if we see Tesla breaking below 658, look for support at 626 and below that at 594. On Apple stock, we were down 2.55% today, and we see Apple breaking back down below the 20 simple moving average, but still holding on to the bull trend. So it is possible that Apple is starting to roll over as well, with price action below that 20 simple moving average. However, this could still be a false breakdown to the downside, and we could see a bullish bounce as soon as tomorrow, saving the bullish trend in Apple. We still need to see Apple getting back above 149 to get to our price target at 156. We still need to see Apple breaking back above 149 to get to our price target at 156. If we see Apple continuing to head lower and breaking below support at 145, that does increase the chance we're going back to the 50 EMA just above 142. Below the 50 EMA, look for the gap close at 137. On the financial sector, we were down 1.23% today, and we still see the financial sector holding on to that full bull trend. It is possible the financial sector is going to come back down to the 50 EMA to close that gap. On the industrial sector, we were down 1.09% today, closing right on top of the 50 EMA and very close to losing the full bull trend, even though the industrials are still holding on to the bullish trend. The healthcare sector was down 1.52% today and closed right on top of the 5 EMA. The healthcare sector is still in a full bull market, even though it does look like it could have been topping out and it was well above the upper Bollinger Band yesterday. The energy sector was down over 2% today, closing below the lower Bollinger Band and confirming it is still in that bear market. We have the full bear trend and price action below all the moving averages. So jumping back over to SPY, I can't stress it enough that now is not the time to be taking on a ton of risk. Remember, we hit a critical price target at 446, and now we're seeing SPY pulling back in a very meaningful way. So now is not the time to be aggressively buying because we did lose the bullish trend in the triple Qs, and the tech sector could be leading the way lower, so it could be possible that SPY is coming right behind it. So be cautious and be patient, and now is the time to make sure you're being extra disciplined because you don't want to buy the dip too soon if we're going through a major correction. I'm not telling you that we're definitely going through a major correction, but all of the warning signs are there. We're closing below critical support and we are losing the bull trends in some very critical sectors. So stay cautious and stay disciplined, and remember it's always better to lose out on a little bit of upside and protect yourself from a lot of downside. The risk reward is just simply not there to get overly aggressive, and definitely don't be leveraging your accounts at these levels. Also remember that I do have my own trade alert service that does very well in volatile markets, and now could be the best time to try out BANC trade alerts. It only trades TQQQs and it's very simple to follow, and I'm currently running a 50% off promo code for your first month. Now could be the best time to try BANC trade alerts, so if you're interested in checking it out, you can find out all of the details on how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.